Good night, everybody. Welcome back to another weekly market update. Hope you guys have a good Easter days of Easter, but I still come out here and make videos for you guys. So I hope you guys appreciate it, and it earns me a like. Make sure you hit the like button. It really helps out pushing out these videos and help as many people as possible. Because guys, we've been spot on week after week. It's been kind of scary how spot on we've been, and we're gonna keep predicting this market accurately as possible. Also, I'm traveling today, so I don't have my really nice mic. I'm just using the regular mic today, so if the volume sounds a little bit different, I apologize. But it's hard to bring that that nice little microphone that I have back at the studio. But whatever, we'll do what we can. We're here for the charts. If you guys want to learn more about the stock market, the crypto market, make sure you subscribe to the channel. Come out with these videos every single week, and we also come with a lot of educational content throughout the week. So you gotta make sure turn on the bell notification and you subscribe to the channel. But let's get straight into it. S&P 500. We saw a pretty red week last week. It was a short week. We had three red days, one green day. Currently sitting in a bearish engulfing candle here, so looking really ugly, and pretty much crossed on this 50 MA. We've been trying to find support on the 50 MA, but we're just being unable to. And right now, the target that we have for the S&P 500 is going to be around these lows, these 430 lows. And we've spoken about a potential inverse head and shoulder here setup forming until we break out, so we're still looking out for that. But right now our current target is around this 430 lows, which we have been speaking about since up here, and we reminded you guys last week as well that we were thinking this is going to be a false breakout here, kind of trap the bulls, thinking we broke about this really strong resistance here and then push it back down, and which is exactly what happened. That's why we've been saying it. So we've been predicting the market really strong. Another thing we could see next week is right here. You have the 100 MA, the red line, and the 200 MA, the purple line. Potentially we could get death cross here, and usually when we have a death cross, you have a pretty strong sell-off, and that could also mark the bottom of this kind of pullback. This is pretty much pullback since the beginning of the year, and we do think the bottom will be around this around early May, when the Feds, I believe the Feds have the meeting on May 3rd. Could be wrong, going off the top of my head, but that's when we believe the bottom will be around this area. There's going to be a really important stat I'll be showing you guys later in this video, so watch this whole video. I'll be showing you guys why I think the Fed meeting will most likely be a bullish scenario for the stock market. I'll be showing you that chart later, so make sure you stay tuned for all that. Now, if we zoom more out and we actually take a look at S&P 500 on a weekly time frame, what do we see here? We see a 50-50 sell signal. What does that mean? The 50 MA, this green line right here, we just lost it as support. You see we bounced on it prior, currently lost it. When we lost it previously here, we also kind of rejected it all off of it as well. And if we zoom out, every time we kind of got to the 50 MA was the support area. As you guys can see from here, we try to bounce on it, but the Kobe sell-off was strong. And if you guys see every single time here, you just you get the point, resistance up here, resistance up here. You can just see how strong the 50 MA is on a weekly time frame, and we just currently lost it, which most likely looks like we're going to be seeing some more selling off. That's for the S&P 500. Now let's take a look real quick at IWM. IWM was actually one of the stronger sectors this week. So IWM still got rejected off of this supply zone up here. We talked about shorting the IWM. This is on a weekly time frame. We had one red week and we had a pretty weak green week this past week. If we zoom more in on the daily time frame, we can see that cross, fully completed pretty much here. You might have the 100 cross the, we got this 50, sorry, rejecting currently, and we'll probably see some more selling off. We'll see how we react. A really strong zone will be just around this 190 area here. If we hold it, we could see it bounce back up to to around maybe the 2.5s. The WM just loves to be in ranges. We're in this range up here for the whole year. We've been sitting in this range, kind of still looking like a bear flag. The main thing I'm looking at, if we do lose these lows right here, I'm looking for a short to fill this gap at 165. That's the main thing I'm looking for. The IWM still sitting in that zone. Zone trading is nice. With the 190 you could have a good risk reward to long to 210 with stop loss right below here, and then if we do cross below it, you could start shorting it. So that's what we're looking at. Triple Q, the Nasdaq is looking much weaker than both S&P 500 and IWM. Well, IWM technically is the weakest looking one, but I think QQQ will see some more selling off as well. Currently, for QQQ, we talked about as well as the inverse head and shoulder. Currently, we're seeing at the lows. The lows that we also talked about, the S&P 500. We're clearly seeing this low bearish engulfing, reject off the 50, that cross 100 over the 200. We could see some more selling off. I do think that triple Q might have still a pretty decent week next week. We do have a lot of bearish signals, but we do have also this gap to fill here, and it is kind of sitting very oversold currently, the triple Q. So I do think we could see also, also if you look at the Nasdaq. Um, we could see I think we could see a potential bullish scenario for the Nasdaq going to next week compared to S&P 500. We could see a rotation back into some tech, some really crucial ones that are in a pretty, in a pretty crucial spot is the NVDA. Had broken out its downtrend currently now, sitting right on it, trying to find some maybe a potential bounce. It's got two gaps here to fill, which it could. So might look on Monday, Tuesday for potential long positions on there. If we lose the lows here around 210s, probably look for a short to 200. Under 200, look for a short to 190. Another one, AMD. AMD just completely got crushed. We had some good AMD shorts, but completely crushed on Friday. I mean, look how ugly this candle is. Just strong selling off. But it's interesting because it does have here on earnings report, and usually AMD has been really bouncing off of earnings, as you can see here. Also on early in January had a horrendous candle, had strong earnings strong, earnings pretty kind of mixed signals, and then strong. Here was actually bad earnings. Well, it was good earnings, but the reception wasn't the greatest, right? So usually, beats earnings, but then we see how they react to the earnings report. So I could see a scenario here, maybe hit 90, and then from 90, look for kind of like a reversal up. Maybe you could refill this gap to 100. And I'd love to see AMD come out next week and retest the 100, load up some more shorts, and kind of continue to move down. Looking for kind of a bounce, hopefully next week into tech to kind of retest those old supported and new resistance, short the resistance, and add more to the longer term shorts. But I love to see some rebounding next week for some tech. Apple sending bearish engulfing. Currently lost 100 to 200, no 150. Could look for the 200 at this point. We don't have much support really for us, and unless we have this 200 MA here. The 200 MA is kind of the last line of defense, since we did lose both the 100 and the 50, and then we saw the 50 cross below the 100 here on the Apple here. Keep in mind, the Apple does hold a lot of a lot of market, right? A lot of market cap on Apple is in the S&P 500 and triple Q and all those sort of things. Apple again has earnings coming out the 28th of April, pretty soon. Is that next week? I believe that's next week, yeah. Or is that a week after? I'm not even sure, to be honest with you guys. What's today? The 20th? I think it's next Monday. I believe it's next Monday, yeah. But we could see some more selling off potentially for earnings. Then earnings could be a strong bullish scenario, but all kind of lines up with looking for the bottom around that Fed meeting early May. So that's kind of what we're looking for right now. If you take a look at some plays that we pretty much called out to the perfection, you can see silver here. Let me change this to white. Silver, strong breakout, just like I told you guys to watch last week. Let me fix this up with the log scale. Silver, strong breakout. Told you guys to watch this next week. Silver's probably looking for much higher. It's probably looking to fill this gap at 25. So I'm still in this play. It is a swing position that we have. Took some profit on it and rolled into some longer swing options. You also have the 50 cross the 200, cross the 100, 100 already cross the 200, and silver just looking great to potentially hit 30, later into this year. So still high on watch for me is silver. Told you guys last week on Friday, watch for silver. It's going to be a good play. Same thing with U.S. oil. If you look at the crude oil, another one that just broke out. Let me change this to white again. Another one that recently broke out. I told you guys to keep an eye on it. I told you guys to watch it. We picked up some XLM and XLY swing, and broke out. Maybe can come retest this 50 here at 100, and you kind of continue to push up. Oil pushing XLE. Same thing, broke out as a center angle. Told you guys to watch for it. It was really nice breakout. Retested it here, 78, and now kind of continue up. Hopefully, can grind up to this 83 zone right here. Then real estate sector, kind of choppy. Had a nice breakout earlier. We called it last week. We had this inverse and shoulder. Nice breakout, pushed all the way up to 50. Of course, which is gonna have some resistance. Now came down. Could come down and really look to fill this gap, and then for the next leg up to try to push his all-time high. Wouldn't put this, out of the realm of possibilities. There's a pretty big gap here for 8, so it could totally come to look to push this up. Now, if we go to groups, we see their relative performance turbo day on Friday for technology, com services, and consumer cyclical. Defensive, energy, utilities still around the day, but kind of held stronger than everything else. Weak relative performance, energy, basic material, consumer defensive, only thing ending green. And for the month, you can see technology, financials, industrials getting crushed. Energy, basic material, consumer defensive, utilities, healthcare, strong still. And it's kind of the sectors that we've been pushing for the last few months. Until you see these sectors rotating, you won't, there's no reason to chase them, right? Use these groups on Finviz to see where the money is going. The money is still going to energy, utilities, basic materials. So why don't fight the trend, stick to the trends, and that's all you have to know. So we're still on a high watch. We see some more continuation, hopefully on oil. I would love to see technology take a slight rebound next week, have the energy that recently broke out, come retest the breakout levels, and then push higher. So I could totally see that. I would love to see that. But big asterisk, a big kind of know what's going to happen. It's going to be those earnings, this tech earning coming up. Are they going to be able to help push all these tech stocks up, right? AMD, NVDA, some of the top ones I'll be looking at for the earnings is usually they kill it on earnings, and semiconductors. There's always a shortage on them. So those are my top ones. I'll be watching for some earnings, but we'll talk about that later, hopefully next week before we get into that earnings season that we're looking at for tech. Now, a component I like to talk about, and we spoke about this, we spoke about inflation chart last week, right? We spoke about, told you guys it's all-time, not all-time, about 20, 40 years or so, whatever, since 1980, the highest. But what can we see? What could be news for the Feds to slow down on this aggressive, decreasing balance sheets, aggressive increasing rates, if they see a top forming, right? So if you see it's been going up 5.4, 6.2, all the way up to 8.5. Now, if we see this come down and kind of form a top, they could have a reason to start slowing down and being less aggressive. Now, I don't think they should. I do think this should still keep going. But we saw that on the CPI report, the actual month over month was lower than predicted. So around 8.5, I believe it was 8.3. So we could see potentially. So if we do see this top here forming, we could see on the May meeting potentially the Feds not being as aggressive as they've been talking about. Now, if we do see this top forming here on this inflation chart, then when they have the May meeting, they may have reasons to not be as strongly aggressive with those interest rates and reducing the balance sheets. Just an opinion out there that we do get to keep in mind. So I'll be looking at this chart to see if we start seeing it cooling off. So that's all for me for today's video. I hope everybody has a good Easter. If you enjoyed this video, for more stock market, please subscribe, leave a like, and I'll see you guys in the next video. Peace.